CFD, contract for difference. Trading is a popular and flexible way to trade various financial markets without owning the underlying asset. Instead of buying or selling the actual asset, traders enter into an agreement with a broker to exchange the difference in the asset's value from the time the contract is opened to when it is closed. This enables traders to speculate on price movements in stocks, commodities, indices, forex, and cryptocurrencies. One of the main attractions of CFD trading is the ability to trade on both rising and falling markets, meaning you can open a buy position if you believe the price will rise, or a sell position if you think the price will fall. This flexibility opens up opportunities to profit in various market conditions. Additionally, CFDs are often traded with leverage, which allows traders to control a larger position with a smaller initial investment. While leverage amplifies potential profits, it also increases the risk, as losses can exceed the initial investment if the market moves against the trader. CFD trading is usually carried out on margin, meaning the trader only needs to deposit a percentage of the total value of the trade, often referred to as the margin requirement. The ability to trade on margin can be an advantage for traders looking to maximize their exposure to the market with a relatively small amount of capital. However, it's important to note that margin trading requires careful risk management, as the leverage can lead to significant losses if the market moves unfavorably. CFDs also offer the advantage of lower transaction costs compared to traditional forms of trading, like buying and selling the underlying asset. This makes it an attractive option for short-term traders, such as day traders, who are looking to capitalize on small price movements. Unlike stock trading, where you own the shares, CFD trading only involves a contractual agreement with a broker, so there is no ownership of the underlying asset. This also means that CFDs are not subject to certain regulations that apply to direct asset ownership, which can sometimes provide traders with more flexibility. However, due to the speculative nature of CFDs and the risks involved with leverage, it's important for traders to fully understand the market, develop a trading strategy, and apply strong risk management techniques. CFDs offer great potential for those who are comfortable with their risk profile, and when traded with caution, they can be a useful tool in diversifying a trading portfolio.